Hi there, welcome to my channel. My name is Gloria Adeoye. I'm popularly known as the Pips Grabbing Chick, and this is the channel where we teach you all the winning strategies that will make you profit. If you're new to the channel, don't forget to subscribe and click on the notification bell so you get all the videos as they drop. As you already know, this is the channel where we teach you to profit. Today we're going to be talking about trading market gap. This video is going to be one of my very educative videos because this is one aspect of trading that most people ignore. Trading market gap. How do you do it? What do you need to know about it? And how can you begin to profit or lose money from it? So that's what we're going to talk about in this video. You ready? Let's go get it. All right, first off, what is market gap? The market tends to gap like at the beginning of a new market week. Say the market closes on Friday evening and then it opens on Sunday night, and it opens with a big gap, or depending on your time zone. All right, so and it opens with a big gap. So when the market does that, the point where it closes is way different from where the market opens. Usually when the market closes at this point, at the open of the market, minus the regular broker gap, this is not we're not talking about the broker gap and all the spread and all that usually follows a new market day or a change in session. We're talking about the actual market gap, wherein price will move or will gap 50 to 100 pips away from the initial or the last close. So the market closed at this point and it opened on Sunday, and this is where it opened from. So these are the things that you are likely to see in the market on a Friday. That's the reason why carrying a trade over the weekend is not exactly a good idea. I see most traders do that, especially when they are running at a loss. I mean, you see a trader on a negative, his MetaTrader 4 is blood red, and instead of him to just cut his losses or her losses, that trader decides to take the trade over the weekend, hoping that when the market opens, the losses will reduce. Make no mistake, I've also done that. I mean, it has happened even to the best of us. We've all had days when we made a trading mistake, but for some reason, we're not agreeing to accept the fact that, yes, I made a mistake. This was a wrong call. We'll continuously keep arguing with the market like, no, it will go. No, it will go, leave it, it will go, and we'll keep arguing the market, and we'll keep holding on to a losing trade, and that will get minus the stress. You now have to carry the trade over the weekend, and then you begin to hope and pray that there is no global economic situation that will make the market gap. So it has happened to all of us, most of us anyway. But here's the thing: it doesn't have to happen to you. It doesn't have to happen to you. That's the reason why you need those who are trading. You need those who are experienced in the market to guide you. So if it hasn't happened to you, learn from us. Don't do that. Don't do that. Don't carry a trade over the weekend. It is not advisable, because when the market opens on a Sunday and something happens and the market gaps, if it gaps against you, then you will be in trouble. So what is the reason why the market tends to gap? A lot of things could be responsible for it. One of which is change in global events. So say something happened in the US economy or in the world's economy that is factored into the market. You see that market gap, you see that change. Now here's the rub: you can't really control these things, right? So holding a trade over the weekend is not really safe because you can't really control it. The thing you can actually control as far as trading goes is when you click the buy and when you click the sell. These are the things you can control. All right, when you take a trade and when you exit the trade, these are within your control. But every other event surrounding the market is out of your control. So things you can control, you don't want to mess with it. You don't want to joke with those things you can control. You can control when you enter and when you exit. So take that control serious. So holding a trade over the weekend, you can't control what will happen to the global economy. A pandemic could just spring out of nowhere a tornado, or earthquake, or anything could just happen that will shake the world and to reflect in the market. And then you see the market and then you begin to panic. You begin to panic, and then when that happens and it goes against you, you're toast. So it's not safe, it's not wise for you to hold a trade over the weekend because of the market gap. Now, another thing you need to know about market gaps is that when price gaps in a particular direction, it is expected, take note of the word expected, to make up for the gap, to cover the gap. So say the market pushed all the way to this point, it is expected that the market will drop and drop just to fill out this whole gap. But when will that move happen? You don't exactly know. So some traders try to be smart, all right? They try to be smart by trading the market gap. That is a very, very risky trade. If you're looking to make your probability of trading 80 to 20, trading the market gap is putting your loss scale at 90% and your profit scale at 10%, because chances are you will lose the trade. Because if you're saying that, okay, if the market gaps to the upside, then it's going to sell to cover this space. Do you know when exactly to sell? You don't, because at this point there really is little or no price action strategy that you can now begin to, okay, this is what I'll see, this is what I'll see, because this thing can just continue to push up. For all you know, for the rest of today, it could keep pushing up. So what those traders would do is that the minute the market opens with a gap, on the very, very few hours that the market gaps, they hop into it for a sell. So if it gaps towards the upside, they hop in for a sell. If it gaps to the downside, they hop in for a buy. That is very risky. That's very risky. You don't want to do stuff like that. You want to make sure that you wait for the market to give you a clear direction before you enter the trade. That's the reason why market structure is very fundamental. Market structure, you can't go wrong with market structure. You need to understand the behavior of the market. All of these strategies that people run around peddling, it doesn't hold water where market structure is concerned. It doesn't at all. All right. The most important aspect of Forex is understanding the psychology behind the market, understand the market behavior, understand the market action. So if you don't understand these things, you begin to struggle. You begin to make a lot of mistakes. So one of those fancy strategies is this gap trading. So people get excited about it. Maybe they see the market gap, they jump in immediately for a sell. So this was how gold opened last night, right? It opened this way. So it closed here and then it pushed all the way up, opened here. And then what would those guys do? They'll quickly try to catch this sell. So now let us analyze this now, right? So let's say you were able to jump in at the point, because when these things happen, the minute it gaps, there is that instant drop, like instant. So say you jumped in, maybe you jumped in here. Take note, at the point where the market opens at that gap, there is also that broker gap, the spread and all. Because when the market just opens, there is massive spread. So you jumped in, you paid your broker massive spread, and all the other spread that follows. And then this market, the market is still wobbling. And then what happened? A strong push up. So you jumping in now. At this point, you're panicking. Trust me. At this point, you're panicking. At this point, you're panicking. Then you begin to shake, and then maybe the market begins to drop at this point. So this whole move here just barely covered your spread. That's just what it did. It just barely covered your spread. And then what happened? The market went all the way up, So at this point now, you are panicking, because you know that you've broken a rule. You know that you've taken a risk that will not pay off. So you have either of two options: to exit the trade, which is the best option, or to now begin to wait, hoping that this thing will turn around. That is the worst option. So it's not safe to trade gap. You don't want to trade it when the market gaps happens. It just tells you to wait for price to cover the gap. However long it takes for it to cover the gap, no matter, you will just have to wait. Now last night when I did my analysis for the week, analyzed that I'm looking for a buy opportunity on gold at this zone. So I marked out my zone. I marked out the potential move that I'm expecting gold to do, but before I now take my buy. But look at what happened. The market opened this way and dropped and pushed all the. Can you see how it has just clearly pushed all the way to the point where I'm expecting the market to buy from? Can you see that? So I was expecting that when the market opens, it does a drop, and then I'll buy from this point, and then I'll take profit here. But what are we seeing here? We're seeing that the market opened this way, did a little gap, and then did a little drop, and then what happened? Continuous push up, like clear buy, clear buy. And for all you know, this whole coverage right here, that's the end of the gap. Because see, let me show you something. Let's see something. Now this was where the market, that was where price closed, isn't it? So take a look at this drop. Can you see that? So this is clearly the end of this closing. This is clearly the end of this gap. So imagine this guy that sold here. The guy would have no reason to be in this trade. He just has to exit the trade, because this is a wrong call. It's a wrong call. So don't trade market gaps. Don't try to be smart. One of the things you don't do is think for the market or try to be smarter than the market. You always want to follow the market. So this analysis I did, the market didn't give me an entry. That's just what this means. It didn't give me an entry. It gapped and just went all the way up. So I didn't get an entry. I didn't take the trade. That's just what it means. So what that means is I will wait for another opportunity to take the trade. That's just what this means. That's just what it means. So like I always say in all my videos, the trading the market is like trying to catch a bus. You miss one, you wait for the next one. All right, you don't rush this. You don't try to rush this market. Like you don't trade it like you're desperate. All right, you want to be very calm about it. You want to be calculative. You want to be strategic, because this is a market of strategy, right? Those guys behind the market, they don't just throw money around. They know what they're doing. They are very calculative. So that's the kind of trader you should also be, a calculative trader. A trader that is very selective. You don't just trade just because. You trade when all the criteria are met. All right, so if you're new to the market, you know that you must have a good understanding of market structure. Then you need to purchase any of my masterclasses, because truth is, this masterclass is designed to make you profit. Now, we're not talking fast strategies. We're not talking all of the strategy everybody just going around mentioning and all that. We're talking market structure. We're talking price action. We're talking naked chart trading. We're talking being able to make you or help you understand the psychology behind the market. That's what we're talking about in all of my master classes. That is what I teach. So I hope I will see you on the inside. So if you've enjoyed this video, don't forget to like, subscribe, share, do whatever you want to do with it. Just make sure that the knowledge is being shared, because this is a channel where we teach you what works and how you can trade a profit. So I see you again another time. Have a great one, and welcome to a new month. Bye bye.